Most people underestimate the power of small numbers. They think you need millions to change your life, a massive portfolio, or impossible luck. But history proves that timing and conviction are far more valuable than size. One well-timed decision, one overlooked opportunity, one moment of belief before the crowd, that's how ordinary investors become extraordinary stories. Right now, that moment could be 1,000 XRP. It doesn't sound like much. 1,000 tokens, small enough to fit on any exchange, affordable enough for nearly anyone. But by 2030, that small position could represent something far greater than its face value. Because beneath the noise of daily price swings, Ripple's technology and the XRP ledger are quietly aligning with the largest monetary transformation in modern history. Welcome back to Crypto Equation, where we separate speculation from strategy and show you how understanding the why behind the market can change everything about what you do next. The story begins with what most people overlook, the purpose. Every cryptocurrency claims to solve a problem. Few actually do. Bitcoin gave us digital scarcity. Ethereum gave us programmable money. But XRP was built to solve something far older, the inefficiency of global payments. The traditional system still runs on SWIFT, a network built half a century ago. Transfers take days, cost fortunes, and require banks to park trillions in dormant accounts just to keep money moving. Ripple's solution changes that. Instant settlement, near zero cost, and interoperability across borders. The fuel that makes that system work is XRP. If you own even a small amount, you hold a fractional piece of that infrastructure. You're not betting on hype, you're aligning with necessity. Now imagine the scale of what that necessity means. Global cross-border payments exceed $150 trillion annually. If even a fraction of that volume migrates onto RippleNet or similar networks using XRP as bridge liquidity, the demand curve changes dramatically. Let's be conservative. Suppose only 0.5% of that value moves through XRP-powered corridors. That's $750 billion in annual flow. XRP's total supply is 100 billion coins, with roughly half already circulating. Simple math shows that operational liquidity would require billions of XRP locked in institutional use. When real demand competes with limited supply, price adjusts upward, not because of hype, but because of function. That's the quiet math most retail traders ignore while chasing the next meme coin. The year 2030 isn't far away, just over half a decade. By then, nearly every major bank will be fully migrated to the ISO 2022 messaging standard. Central banks will have deployed their CBDCs, most built on or connected to private or hybrid blockchains. And tokenization, representing stocks, bonds, and real-world assets on-chain, is projected by Boston Consulting Group to reach $16 trillion. All those systems need something neutral, fast, and liquid to connect them. That's where XRP fits perfectly. It was engineered for compliance, speed, and scalability before those terms became buzzwords. That foresight is what makes 1,000 XRP today feel insignificant, until the world starts using the rails Ripple built years ago. Most investors can't see that far ahead. They're conditioned to think in days, not decades. They stare at charts instead of infrastructure. But wealth doesn't come from what's obvious. It comes from what's inevitable that nobody notices yet. Think back. When Bitcoin traded below $100, most people said it was too risky. When Ethereum was under $10, most said it was too complicated. The pattern never changes. Disbelief first, regret later. Regret. Owning 1,000 XRP isn't about predicting the future. It's about positioning for it. It's about recognizing that the world is shifting from analog finance to digital liquidity, and that shift rewards the prepared, not the perfect. Let's talk psychology for a moment. The reason so many investors miss life-changing opportunities isn't ignorance. It's impatience. They want instant results, immediate confirmation. But real transformations unfold quietly, before they explode publicly. The early adopters endure ridicule, boredom, and doubt long before validation arrives. If you can hold through that silence, 1,000 XRP isn't just a holding, it's a test of conviction. It's proof that you understand what most people won't until it's too late. Here's what the numbers already show. Ripple's on-demand liquidity. ODL volumes have grown more than tenfold since 2020. Dozens of payment providers now use it for real cross-border transfers. Not pilots, but production transactions. In regions like Asia-Pacific and Latin America, entire corridors settle in seconds using XRP behind the scenes. And yet, Retail investors barely notice. That disconnect between perception and progress is where opportunity lives. Because once perception catches up, once media outlets start reporting adoption as if it happened overnight, the easy entry points vanish. Right now, you can still accumulate 1,000 XRP without headlines fighting you for it. By 2030, that window will have closed. To put things in perspective, let's look at realistic outcomes. No hype, just math. If XRP eventually trades at $5, your 1,000 XRP equals $5,000. At $10, that's $10,000. At $50, that's $50,000. Even if it takes years to reach those levels, those are meaningful results for a small, patient position. But the real story isn't the potential price. It's what happens because of adoption. As Ripple expands, as liquidity deepens, volatility decreases, and XRP evolves from a speculative asset into a utility backbone. That transition is what changes the narrative from crypto token to infrastructure asset. When that happens, the market stops valuing XRP emotionally and starts valuing it mechanically. And that's when real price discovery begins. Dash, dash. Most people will miss it because they still think in headlines, not in systems. They want instant excitement, not quiet progress. But progress is what compounds. It's what turns small, forgotten positions into massive leverage years later. By 2030, we could see global payments, CBDCs, and tokenized assets operating on interoperable ledgers, many of which will need a neutral settlement asset. The XRP ledger was built for exactly that. So while others chase speculation, you're holding the bridge that connects it all. The beauty of small positions is that they let you sleep at night and dream long term. 1,000 XRP isn't an all-in gamble. It's a calculated statement that you see where the world is heading. You're giving innovation time to work, and time is the most powerful multiplier in investing. Look at every disruptive technology curve. The early years always look flat. Adoption crawls, skepticism dominates, and prices barely move. Then a tipping point arrives, and the curve goes vertical. That's when conviction pays out. By the time the mainstream notices, the easy money has already moved. That's the phase XRP is in right now. It's not new enough to be dismissed, but not yet mainstream enough to be understood. That window between disbelief and acceptance is where wealth is built quietly. Let's get realistic about the next few years. Between now and 2030, we'll likely see regulation clarity spreading worldwide, giving institutions the green light to hold and use digital assets. CBDCs in production across dozens of countries. Tokenization of financial assets, where value moves across ledgers instead of paper systems. ISO 20022 fully implemented, standardizing global financial messaging. Every single one of those shifts requires interoperability, the ability to move money and data instantly across borders and systems. That's the function XRP was built to serve. So when people say, what if XRP never takes off? They're really asking, what if the world never upgrades its financial plumbing? And that's not realistic. Dash, consider what happens when liquidity becomes global and programmable. Right now, banks pre-fund accounts to handle payments. That ties up trillions. Freeing even a fraction of that capital creates enormous demand for bridge liquidity. The network that provides it becomes indispensable. You don't have to own millions of XRP to benefit from that shift. You just have to own some before it's obvious. That's the math. If the liquidity requirement grows faster than circulating supply, price adjusts upward automatically. Not from hype, from mechanics. The numbers don't lie. There's also the mindset factor. Owning 1,000 XRP forces you to think long term. You start watching partnerships instead of price spikes. You start reading Ripple's quarterly reports, IMF papers, and central bank statements instead of social media threads. That change in perspective is what separates investors from traders. Markets reward that shift. Because when you understand what you own, volatility stops scaring you. You see red candles as sales, not threats. You stop trying to time the market and start giving time to your position. That's how conviction compounds. By 2030, crypto as a concept won't look like it does today. It'll be invisible, integrated into finance the way the internet is now invisible in everything we do. When that happens, the winners won't be the loudest projects. They'll be the ones that solved real problems quietly. XRP is built to disappear into the background of global money movement, to make transfers instant, cross-border, and compliant. If you understand that, you understand why even a small stake matters. The real payoff isn't only in potential price, it's in perspective. Holding 1,000 XRP now means you recognized efficiency before efficiency became mandatory. Dash, imagine explaining to someone in 2030 that you could once buy 1,000 units of the asset powering real-time international settlement for the price of a nice dinner. And you didn't. That's how hindsight feels. Every financial revolution looks boring until it doesn't. Bitcoin holders know that story. So do early tech investors who believed in cloud computing when most people laughed. The pattern keeps repeating because human psychology doesn't change. We resist change until it's too late to benefit from it. You don't need to predict dates or prices to break that pattern. You just need to act while the math still favors you. Here's the bigger picture. Ripple has offices across 6 continents. Its technology connects payment firms, banks, and fintech startups in over 40 countries. The company is expanding into tokenized assets, carbon markets, and even real estate liquidity. Every new corridor opened requires operational XRP, not speculation, usage. That usage accumulates volume, and volume eventually forces price discovery. This isn't guesswork, it's economics. When an asset becomes useful, it becomes valuable. So when people scoff at 1,000 XRP, remember they laughed at 1,000 Bitcoin too. The difference is that you've already seen this movie once, and this time, you know how it ends. We're not saying XRP will hit astronomical numbers overnight. We're saying that by 2030, the systems it powers will likely be so embedded in finance that owning a small part of that ecosystem could make a real difference. That's realistic optimism. It's the kind that builds sustainable wealth instead of chasing quick wins. So stop thinking of XRP as a lottery ticket and start viewing it as a long-term equity in financial modernization. That mindset shift changes everything. Dash, if this perspective helps you see the opportunity more clearly, subscribe to Crypto Equation, where we decode crypto, finance, and investing with logic, not hype. Ask yourself, where will the world's money move in 2030? And how much would you pay today to already be on that network when it does? Because sometimes 1,000 tokens isn't a small bet. It's a small doorway to the future. This is Crypto Equation, and I'll see you in the next one.